Index heavyweights continue their gradual climb, but mid-caps come under pressure again. Consumer durables and utilities are the big drags, even as IT, metals and auto stocks eke out some gains.
Tata Motors arm JLR has announced a £500 million investment to transition to parallel production of ICE, EV and hybrid vehicles at its Halewood unit. The move is a part of JLR's plan to electrify all its brands by 2030. The Tata Motors stock gains.
The Karnataka government is considering a new 5-year policy to promote electric vehicles and strong hybrid vehicles with road tax exemptions, incentives for consumers and capital subsidies to draw automakers. Maruti shares are at the highest point of the day.
China may be considering an infusion of 1 billion yuan or $142 billion into the biggest state banks to increase support to its ailing economy. The move, a part of the economic stimulus package, given a fillip to the commodities.
Good afternoon. You're watching Business Lunch here on CNBC-TV18. I'm Hormas Fatakia. With me is Vinny Motiwala as always. It's a good day again for the Nifty, Vinny. Good afternoon to you. And it's the Nifty expiry today, so it's a big day to watch for the index.
Big day to watch. Let's see how the volatility moves, but not a bad day, right? 26,000 is what the Nifty is holding on to. Broader markets, that's continuing to see that bit of a red, and that selling that we're seeing yesterday seems like that's continuing today as well, Hormas, because that's underperforming.
Yeah, it is underperforming, but the Nifty is the one to watch out for, right? 26,100 is where the index currently is, nearing the highest point of the day. It's the monthly expiry, and it is going to be the 4th straight positive FNO series for the Nifty, and now almost 900 points higher for the index in this September series. So it's been a good one, one that has had many records for the index. But yes, just as Vinny was highlighting, the broader markets are under a bit of pressure. But what's doing well, though, are auto stocks, and Maruti, and both Maruti and Tata Motors are doing well in the session. Maruti is at the highest point of the day now, 4.5% higher on the stock, now almost at 13,400 is Maruti, and Tata Motors too surging at the highest point of the day here as well, with gains of around 2.5%. What is also doing well along with auto are the metal names, and that is also courtesy these hopes of more stimulus coming in from China, and most of these metal index constituents are trading with gains, be it the likes of Hindalco, Vedanta, Nalco. All of them are seeing healthy gains in today's trading session. But yes, the broader markets, Vinny, are in some sort of pressure.
Broader markets in some sort of pressure. Only name in auto that is not doing well today is Hero Motor Corp. But let's move on and let's get you an exclusive. Sources are telling CNBC-TV18 that the government could mull including core inflation figures in the upcoming CPI release. Sapna is here to tell us more details on that. Sapna, what are you picking up on this front?
Well, as of now, this is not even probably at a discussion stage, but we are given to broadly understand that, at some point in time, the future CPI releases could have more options in terms of the inflation estimates. Now, we should be aware of the fact that the Ministry of Statistics has already got some recommendations in the open house that was conducted just 2 days back in Bombay, wherein, a number of forecasters and economists have told the ministry that they should start compiling core inflation number. Now, we are aware about the fact that the current CPI release carries two options. One is, of course, the overall CPI general number, which is a number that everybody watches out for, and the food inflation number. What we are now talking probably about is having a core inflation number as well into the release, and probably even having one more data point in terms of numbers excluding food inflation. So we are talking about 4 options actually, 2 plus the 2 that I have spoken about. Now, some kind of a discussion, debate will have to unfold in the government on this. And what is the timeline for this to really happen? This is something we have to wait and watch and see. There's already a lot of background discussion going on in terms of finalization of the change in the base year of CPI, so that also needs to be kept in mind. But broadly, we have been clearly indicated that these are some of the discussion points that may come up within the government, internally as well as externally, and we have to keep a watch on that. If this happens, 2 more options into the CPI print, that will be very, very important for policy making and other areas as well.
Thank you so much for that, Sapna. But the Nifty indices rejig, that will be coming into effect from tomorrow. Which are the stocks there? What are the inflows that we're expecting? Surbi is joining in with us. Surbi, good afternoon.
Hi, good afternoon. Well, a couple of changes coming into the NSE indices tomorrow. This would be for the Nifty 50, the Nifty Next 50, the Bank Nifty and the PSU index as well, the PSE index. So let's go over some of the key changes, starting with the Nifty 50. Just a reminder, Trent and BEL will make their entry into the Nifty 50, and Divi's and LTIMindtree are on their way out. And on the back of these changes, Nuvama estimates that Trent is going to see inflows of about 702 million. Remember, these are inflows because of the passive funds that are, investing in stocks based on the indices. Similarly, BEL will see an expected inflow of about 430 million. Divi's and LTIMindtree, they both go out, and the outflow from both of these stocks individually would be around 235 to about 290 million each. Let's talk about the weight increases. Cipla and HDFC Life will see a minor increase in weight, because of which Cipla might see an inflow of about 12 million. Coming to the Nifty Bank, good to remember here that Canara Bank makes its way into the Nifty Bank, and Bandhan Bank would be out. And of course, all of this is effective Monday. Tomorrow, end of trade, is when the changes will actually be put in motion. And because of this, Canara Bank would be receiving inflows of about $90 million. There are lots of inclusions in the Nifty Next 50 as well, and then of course exclusions as well. The inclusions, just to put that on your radar, would be Divi's, LTIMindtree, JSW Energy, Macrotech Developers, BHEL, NHPC and Union Bank. Now, I thought I'll pick out just, 6 or 7 stocks where the inflows would be the most because of index changes and the passive money that's coming in the stocks. So the one to top that list actually is, of course, Trent. $495 million worth of inflows expected. The next one is BEL, 336. Canara Bank, which comes into the Nifty Bank, is the number 3 stock here on the list, $92 million. And then you have JSW Energy, Lodha, NHPC, BHEL. All of them are receiving flows as well, anywhere between 25 million going up to about 50 to 55 odd million. So those are the key changes for the Nifty 50, the Nifty Bank and several other indices as well.
Well, it's raining in Mumbai, it's raining on Dalal Street as well, but that are the dollars that are raining on the stock. Surabhi, thanks a lot for that. And staying with the changes to the index, Trent will be entering the Nifty from tomorrow. The stock has been a phenomenal wealth creator, doubling in the last 6 months itself. Mangalam is here to give us more on this Tata Group giant.
If you ask a technical analyst, they will say Trent has always been in an uptrend.
But is it going to be styling again? And it's been in style for a few years, and it's going to continue, I seem
so long as the stores have stuff which is trendy, this Trent stock will remain trendy as well. But why it is called Trent? Because it's a portmanteau of Tata Retail Enterprise. Club all of that together and you get Trent. It will make its way into the Nifty tomorrow. And what a wealth creator it has been. If you look at, the recent time series data of the stock itself, in the last 6 months, it's 101% gain. 2024 so far, 160%. Last 12 months, 265%. And if you extend that timeline to 3 and 5 years, it's a 9-bagger or a 16-bagger over the last, couple of years or so, a big wealth creator. And as a result of which, it will enter the Nifty. And this entry into Nifty will bring it about $0.7 billion of passive inflows as well. But speaking about the Nifty and Trent, one can't ignore the massive presence of the Tata Group itself in the Nifty. Trent will be the 6th Tata Group to be included in the Nifty. So if you look at, the Nifty stocks and the Tata Group stocks out there, you have TCS, Tata Motors and Tata Steel, who've been around in the Nifty for a while. The last 3 or 4 changes on the Nifty, you had at least one of the Tata Group stocks as well. So if you look at names like, Titan and Tata Consumer, were all new entrants in the recent few years itself. So that makes Trent the 6th in terms of Nifty. But not only is it the 6th Tata Group stock in the Nifty, it's also the 4th largest Tata Group stock in terms of market cap, behind only TCS, Tata Motors and Titan. TCS a 15 lakh crore, Tata Motors around 3.6, Titan about 3.3, and this with the kind of wealth creation that it has done, it's done 2.78 lakh crore in market cap itself. Speaking of Trent's market cap, it's extremely interesting to look at the market cap of all other retailers and the stark divergence between Trent and the others as well. So you have Trent at 2.78 lakh crores, V2, Canterbury, Credo, Spencer's, Aditya Birla Fashion, all of them are much lower. So what I did was I took that list and I clubbed all of them together. Look at Trent, that is 2.78 lakh crores. Add all of them together, it's just 71,000 crores. So that's the stark difference. But if you add Trent and all the others, you actually get Avenue Supermarts, D-Mart's market cap at 3.38 lakh crores. And what's even more interesting, if you add Trent, others, and Avenue Supermarts, you get very close to Reliance Retail's latest valuation of $100 billion. But for all its wealth creation, Trent has actually reported massive growth in its numbers as well, thanks to Zudio. Even the most recent LFL has outdone the industry peers. So if you look at, the Q1 FY25 like-for-like growth, it is 22%, and this on a high base of 63% and 31% already. And if you look at the store footprint as well, Zudio, it has now two times more Zudio stores than Westside, and the company is also seeding more formats. So the obvious question is, where to from here? Citi believes there is room for even more. They've initiated buy on the stock today itself with a target price of 92.50, including Trent in the Pan-Asia high conviction focus list. In fact, transforming the company from a single format to a multi-format and multi-category player has led to this higher revenue CAGR, which they expect to be anywhere between 40 to 41%, leading to profit growth of 56% over the next 3 years on a compounded basis. So in Trent, and a lot of wealth created.
Indeed, and as you mentioned, right? It's ask a technical analyst. Trent always in an uptrend. Thanks a lot, Mangalam, for that update on Trent. A time for a short break. Up next, we get you the latest as of the state of Karnataka eyes and electric vehicle policy to attract more investments. Stay tuned. Back on the other side.
Welcome back. You're watching Business Lunch on CNBC TV18. And let's move on. And the Karnataka government, that's considering a new electric vehicle policy. And this is with the demand to lead measures likely as the state is eyeing a 50,000 crore rupees worth investment by 2029. Let's go across to Parikshit, who's here joining in with us to give us more details on that.
Well, the Karnataka government has been holding discussions on a very ambitious 2024 to 2029 electric vehicle mobility policy. And we believe that this policy is now in the final stages, and possibly by October, we could see the final contours being announced. Now, what does this really say? Well, the state government is considering exempting all electric and strong hybrid vehicles under rupees 25 lakhs from road tax. Now, as we know, apart from GST, which is a central tax, you have a road tax that is imposed by every state government, and this is in the range of 10 to 13% or even 15% in some cases. And if the state decides to waive this off, the cost of the vehicle comes down considerably. So this is one, exempting road tax for all hybrid and electric vehicles under 25 lakh rupees. At the same time, incentives will also be given to consumers who are buying electric and hybrid vehicles. Thirdly, the Karnataka government is hoping to attract investments of 50,000 crore in clean mobility value chain. This would be done by granting incentives to the extent of 50% of the value of fixed assets. Now, this is a maximum limit. New projects or expansion of projects can get a PLI of 1% of the turnover for a period of 5 years. Companies may get 15 to 25% capital investment subsidy and stamp duty exemptions as well.
Parikshit, thanks a lot for that. Some exclusive details coming in there from Parikshit. But let's also listen in to what the Karnataka Minister M.B. Patil had to say in a conversation with Ritu.
The EV policy was a latest one, yes, but still we went to modify it to clean mobility now. Yeah. And this one is the Honorable Chief Minister, so it will be shortly clear. Okay. So EV policy has been changed to clean mobility, very strong hybrid systems, and all these have been included. Green hydrogen and all this, yeah.
Okay, on that note, we're going to slip into a very short break, but don't go anywhere. After the break, we'll bring you more news and updates, so stay tuned in.
Welcome back onto the one of the many big voices of the day. My colleague Ekta caught up with Prem Kumar Nair, the group CEO at IHH Healthcare, and began by asking him about the Fortis acquisition and the long pending open offer for Fortis Healthcare. Listen to a slice of that conversation.
I think this matter has wound its way through the courts, Supreme Court, right, and now it's with the Delhi High Court. I would say a lot of the issues have been resolved, right, and this is probably the last final matter, the forensic by Delhi High Court, which is ongoing now. All right, I won't comment on it, right, because it is going through the courts at the moment, and we anticipate that once it is resolved, we let the court process, go through its, usual route. We will, and then we'll have to decide what to do next. The open offer was at $170. Fortis today is at 600 plus, all right? So we will have to make a decision on how we move forward. There are many ways in which we can increase our stake, as you know, all right? But one thing's for sure, we will be staying in India and we will be staying with Fortis.
So there's no chance of selling out that 31% stake?
Absolutely not, all right? We have got Fortis, we've got Gleneagles, we've got twin engines of growth in India. And given the attractiveness of the Indian private healthcare market, we intend to stay and grow in India.
But what do you think about this long journey of litigations, which is still not over at this point in time? Was there a time where IHH rethought its decision of acquiring Fortis?
Well, to be very honest, I think there were times when we were wondering what we got into, right? But over the years, most of the matters have progressed and resolved, one by one. There were several matters going on at the same time, right? So most of them have been resolved, right? And I think we feel, right? I don't want to judge what's going to happen, but we feel that we are at the tail end of this matter, all right? And we really will have a chance to go ahead, all right? Both with Fortis and with Gleneagles, all right? And increase our presence in India.
So when do you expect to hear back on the open offer?
No, can't predict that for the moment.
Probably by the end of this year
Hopefully
or next year?
6 months to a year, hopefully. Yeah.
Okay. Well, this is a hypothetical situation, but if in case the open offer does get approved,
yes,
like you mentioned, the price was 170 rupees. Today, it's over 550 or 600 odd rupees for Fortis in terms of a price. What will IHH do? Will there be a revision of an open offer price on the higher side? What is the decision?
Okay, given that we would like to increase our stake, I think we would have to revise, right, our offer to the other shareholders. So that's probably what it will take for us to do it.
Okay, so you will probably revise the price higher for the open offer if in case you do get that permission to go through. On the other hand, if in case the open offer does face hurdles again, what will IHH do? Will it go through any other route in order to increase its stake? Because currently you do have minority stake.
Yes. Well, first of all, I must say we are happy with what we have at the moment. As I said, we control Fortis, right? Fortis is improving year by year, operational metrics, financial metrics. There's no restriction to their growth. As you can see, they bought a hospital in Manesar, they disposed of 2 hospitals in the south, right? And they're looking at more acquisitions. They've got a plan to expand by 2,000 beds from their current 5,000 beds purely by brownfield expansion.
Correct.
Right? So that's their same store growth, essentially. Right? So Fortis can continue to grow, all right? And we hope there will come a day when we have, years down the road, when we have between the 2 entities about 10,000 beds, right? That will bring us maybe into the top 3, right, hospital groups in the country. That's our aspiration, right? So I think Fortis can, even with the stake we have now and the current growth trajectory of Fortis, it will continue to grow, right? But of course, we would like to increase our stake, either increase the open offer, the offer. We can do a creep, all right?
Creeping acquisition, 5% every year. We can do that, 5%
every year. We can do that. Down the road, maybe we can look at folding Gleneagles into Fortis. That's another option.
And you can catch that entire conversation which Ekta had with Prem Kumar Nair, the Group CEO of IHH Healthcare, today at 4:30 p.m. this evening only on CNBC-TV18. That is a wrap on this edition of Business Lunch from Vinny, myself and the team that put this show together. Thank you so much for watching. Midcap Radar takes the action forward.